For more analysis on this and the world, let's bring in Otaviano Canuto, Senior Fellow at the Policy Center for New South. Welcome to the show. Good to see you, sir. The Managing Director talked about a lot of bad things. We get the COVID, we get the rate hikes, we get the invasion, we get all this stuff, but these aren't new items that we are dealing with. So I'm thinking for 2023, as they bring their forecasts, I guess, significantly down and a weaker outlook, what are they worried about that we aren't seeing?
Well, first of all, it's a pleasure to be here. Frankly, her gloomy assertives during her speech have grounds in the sense that, the persistence of the high global inflation is inevitably leading the central banks to, let's say, to prolong the ongoing hiking cycle. Because despite the slowdown in the global demand for goods, the core inflation continues to accelerate to levels historically high. And any estimate puts the global consumer price index to rise this year on something close to 8.2%, okay? The core at 6.1%. And that's why the central banks will remain hawkish, prolonging the global hiking cycle, particularly in the case of developed markets. And if you think of the gas shock in Europe, which is something already inevitably leading to a very depressive picture when it comes to GDP in Europe, and also the fact that for several reasons, the recovery in China has been, let's say, slower than thought in the beginning of the year, this is also limiting global growth. And
are we talking about negative growth, or are we talking about slower growth? And I imagine it's obviously different for different countries.
Yes. Typically, when the multilateral institutions talk about global recession, they refer to global GDP rising less than the population, but that's for the global economy, which is a bit different when we talk about, let's say, advanced economies, rich economies. In the case of rich economies, the standard way to measure it is by counting the number of consecutive quarters with negative growth rates. And Madame Kristalina Georgieva today referred to the fact that probably next week, the prospects that are coming will show something like a third of countries in the world going through negative growth rates of GDP at least 2 quarters next year.
Okay.
But to the least, even in the other case, growth will be so sluggish that the sensation of recession will also be there.
So let's just say that's the base case. Things are bad. They're going to be, I guess, bad. And how do we turn things around? What needs to happen? I mean, the obvious one is, I guess, inflation, but it sounds like that's not going to turn around. And rates, it doesn't sound like from what you just said, that's going to turn around. But there's got to be some positive catalyst, perhaps in 2023, that we could look forward to.
I don't see any potential source of miracles in that regard. What we can, let's say, cheer for as of now is that the incoming recession, be as shallow as possible. But look, there are still risks that may make the scenario even a little bit worse. Policy mistakes. What the UK tried to do recently was a clear example of a policy mistake, being even reprimanded by the IMF, trying to do tax cuts in a context such as the one. But there is also something else. Look, on the financial sector, the degree of leverage that has been attained in many areas has been very high in the last few years. And overall, one may say that the balance sheets of big corporates are reasonably fine. Many companies used the opportunity last year, or sorry, in 2020, during the response of the central bank, the Fed, to the pandemic financial crisis, to, let's say, to take long liabilities.
Right,
But
right.
but there is a lot of exposure, vulnerability in the case of those portfolios that hold illiquid assets, and turn on uh, their liabilities on a daily basis with liquidity, that are very, let's say, vulnerable to any shock of
Right.
confidence and so on. And that
Otaviano,
makes
that brings up an excellent point that, yeah, hence that they are illiquid is going to be a real problem if they have to mark to market. And let's do this. Let's continue this conversation when there's a little bit more better news. I'm going to find better news for you. Somehow, somewhere, we're going to find some good news out there, and we'll discuss that in the future. But I want to thank you for your time, Otaviano. Thank you very much joining us from nearby here in Maryland.